Good morning, good afternoon, good evening, yWhales, wherever in the world you are today. Welcome to episode 18 of yWeb3, Navigating Frontier Tech. We're going to explore the latest trends of digital landscapes. So from regulatory changes impacting the crypto space to shifts in anti-money laundering rules, we're really going to uncover the dynamic intersection of technology and policy. We'll talk about the aftermath of the infamous cryptocurrency platform FTX, analyze the significant drop in crypto crime, and the transformative collaboration between two nations in building a joint digital economy. Stay tuned. We've got a lot of insights over about AI, the Doomsday Clock that continually shows back up. AI is now an existential threat, and some exciting new developments in the NFT space, along with cross-chain NFT marketplaces. That this week and more on yWeb3. So most importantly, I've got a guest today. She's been here many times before. We've recorded numerous podcasts with her. You're a specialist on deep dive and so many things. Lucia, go ahead and for anyone who does not know you, please give your intro as always.
Well, hi, thanks for having me. I love being here every single time. I was telling you I love it because it forces me to just pay so much extra attention to what's going on in the world, because I'm like, I might have to talk on this, and some of the stories are ones that I might not ordinarily get into just because they, freak me out or creep me out or whatever, namely the doomsday ones that you're referring to, but we'll get into it. So I'm Lucia Gallardo, founder of Emerge. We're an experimentation lab that has focused for the past few years on helping enterprises and governments converge their impact goals along with their innovation goals. And so we have worked on, use cases relating to digital identity, to loyalty, supply chain. We've done some work in finance and financial inclusion and agriculture. So it's been a really interesting way to just see how AI and blockchain sort of have this applicability across different sectors and use cases for different people, and who they benefit, and ultimately how to roll them out to people. So we've worked in nearly every continent, not Antarctica yet, but I'm sure I'll find a way. And I'm super keen to be here, super keen to dive into some of these projects. And I think if you have listened to me before in this podcast, you will know I also have a soft spot for politics and philosophy. So I'm really keen to bring those into our headlines today as well.
Awesome. Well, let's dive right into the stories. There's so many to go through. And so, right off the bat, since the last time you were on, obviously the Bitcoin ETFs did get approved. Yeah. We did not see there's always the people that said Bitcoin was going to, make an immediate double because these ETFs are live. And what it turns out that the ETFs have been right now is just a gateway to allow FTX as well as some other institutionals to legally sell their holdings of Bitcoin to the normal market. So we've seen Grayscale, which was the largest institutional holder of Bitcoin, and they've been so for years and years and years. I think their average cost was under a couple $100, and they've now acquired all this. They had their it wasn't a spot ETF, it was a different type, and now they've converted to a spot, and they're just selling. And BlackRock and everyone else is buying, but we're seeing that kind of downward pressure because you do have someone that wants to unload tens of thousands, if not hundreds of thousands of Bitcoin from theirs. So what was your thought when you saw that go through?
I mean, to be honest, it was expected. Like, you knew that there was going to be major sell-off as soon as they got approved. I think Grayscale has a really large position. I think now that FTX has also finished liquidating a lot of its assets, then we might see a little bit of a recovery in that. But I mean, the goal was really, ETFs are supposed to create this long-term funnel of capital into the ecosystem, and that will have a huge impact and outweigh halving, and it'll go miles into helping us institutionalize the entire asset class. However, it was very expected that there would be this initial sell-off, that ultimately, you would be able to get rid of any large-scale risk that you might be holding if you were a Grayscale that had some issues with something like an FTX. Now, that said, I think in the past, there's a new headline, something saying ETFs amassed 100,000 Bitcoin incredibly quickly over, what is a couple of days, if not, maybe a week or something. Yeah. MicroStrategy had been trying to amass that amount, and it took them 2.5 years. And so
longer.
Yeah. So I think this is just showing you sure, there's definitely a sell-off and there is this intent to sell, but just as eagerly there is this intent to buy. And you sort of saw a lot of these ETFs buy. And so that's telling you that, these dynamics are very short term, and what you're going to see is ultimately long-term interest. That said, I think Deutsche Bank put out a report recently. They surveyed people across Europe, the EU and the UK. Not that those have to be expressed separately. And and ultimately, they found a lot of market pessimism along
Yep.
people, thinking that that we hadn't seen the bottom. That they expected that by January 2025, Bitcoin would hit lower than 20,000. So there's still, I think, some hesitation to get through. I think FTX did a lot of reputational damage. I think people expecting ETFs to be like an immediate huge push into the ecosystem and then it turning out to be a drop in the market. I think those things have sort of scared off a couple of possible retail investors. What I think is going to happen is we need to make sure that we cap this off into a little bit of stability across the market, that we see some healthy recovery from this initial downturn, and then hopefully we'll see the market pick up. But I think if I remember correctly, historically, I think this is sort of what indicates the start of a super cycle. So
and we're still coming up on the halving and all that other stuff. It doesn't change. And the story that's on the screen right now is about not the Bitcoin ETF, but the Ethereum ETF, which is even more insane to think about because Bitcoin is theoretically a store of value, and Ethereum is it's a server credit. It's not cash, it's anything else. So I think what's really interesting is they're already delaying, which they delayed until the very last possible seconds on the Bitcoin one. There's probably Ethereum is as the number 2 cryptocurrency is going to get it on spot ETF. But to me, I think what we're really seeing now is, and I'll say as clearly and nice as I can, that the total failure of the Web3 asset class on custody. No one trusts, FTX was a failure. There's time and time again, every exchange has failed. And so now you're finding institutions, like BlackRock and everyone else, they go, look, we'd rather put a legal wrapper on it, have the SEC, put their normal, kind of governance over this, and manage custody from that perspective. This is not they're not making anything new. They're just, managing the ability to buy it and have it, custodied legally, per se.
Yeah. I think, the Ethereum ETF, I think, will be delayed possibly even more often than the Bitcoin ETF, just because there's so many different versions of describing Ethereum. And I think that there's a problem here because regulators, obviously, some of them don't fully understand the scope of the technology. They don't think that we as an industry are aligned. I remember last year in Davos, I was at a regulatory lunch, with a congressman from the US who said, you guys don't even have your narrative straight. Like, how are we supposed to understand them? And, we were trying to explain, well, that's the beauty of a decentralized ecosystem, is that there's different applications, there's fragmented use cases, and it's supposed to be like that. And so I think, Hester Pierce came out and publicly stated that they had learned a lot from the way that they had handled Bitcoin ETFs. And I think that that's going to hold true for Ethereum ETFs. I think one of the things that she was sensitive to in her interview was she was saying how inherently the disclosure and the use of the product itself didn't line up very often. And so I think here you're going to run into more of that friction because Ethereum has had so many use cases built into it. Whereas you're right, Bitcoin has historically had many use cases, but really its strength has been that it had a cohesive narrative around the store of value, whereas Ethereum is sort of this huge ecosystem that inherently makes it much more difficult for regulators to really understand the financial product version of this and how that translates into something that is safe for retail investors.
Yeah, my own personal opinion is this is so much less interesting than the Bitcoin ETF. It's just quite simply, I don't expect too much on it. So jumping over a little bit more SEC stuff, which I know you love. So Coinbase is a really interesting one. They are an SEC governed entity. They IPO'd. They legally went through that process. They've been around for a long time. They adhere to anything and everything they can. The SEC is basically been ruling by litigation, which is very strange. Historically, that's not the way the SEC does it. They want to have create opportunity. They want to create rules that benefit and protect consumers. And I think that's really shown in this case. And we've seen Brian Armstrong. He's a very rampant tweeter. Or whatever X calls it nowadays, that you and I were talking about earlier. And so I really do feel that Coinbase will prevail in this. And I agree with Bloomberg here. 70% is very favorable when we're talking about against the SEC. to me, this is just showing, that this administration has lost its way. There's clearly consumer demand. There's clearly, the desire to legislate this correctly, and the SEC is just suing people and bringing them to court and shutting it down. So I feel like there's a misalignment of values on here. But what are your thoughts?
Totally. I think you're a complete villain for saying I love SEC related things, and then people that are only listening to the audio can't see my face when you say that. so thanks for that. But I think, Coinbase is an interesting one. There's a lot I could say about them and Brian as a Xer or Twitter or whatever we want to call it. I think at the end of the day, Coinbase has done a lot right in terms of how they've handled this situation. Like, they were quite proactive. It was clear they were on top of whatever announcements the SEC was making. And the problem is that the SEC was so, flip-floppy about the announcements that they were making, that I think the fact that Coinbase can legitimately prove that they responded to some of the, initial asks and announcements and requests and so on and so forth really builds this narrative around how, they tried to the best of their ability. Now, what this really is a reflection of is the shortcomings, not just that the administration has lost its way, but I think it speaks to a wider issue of, who is regulating things that they don't understand? And how does that translate into an ability for people to be compliant with the outcomes of that? So I think what it really goes to show is that regulation has always been reactive. Like, we've known that forever. And I think we've entered this era where it can no longer be that way, right? We are starting to see the incredible need for subject matter expertise to be on the regulatory side, to anticipate some of these, questions and to anticipate some of these regulatory clarity needs. And I think it really speaks to this resistance to change from a political standpoint. I think you're looking at, people that don't necessarily understand this new economy. They don't know how they fit into this new economy. They don't know how to preserve some of the things that give them power or wealth within this new economy. And then that translates into just trying to drag it over, but it is inevitable, and retail investors are asking for it. And I think, people all around the world are sort of figuring out where they become important into the economy. And so I think regulation is facing a really significant hurdle in the trust factor and in this ability to be proactive at some of the technology that's coming their way. And I think Coinbase is a perfect little example of that. But I also think this conversation that we're going to have on AI is a perfect example of it, because both of those are, being driven by these narratives of mistrust in the media. But if you look at Coinbase's trajectory of trying to at least adhere to some of the outcomes that the SEC was putting out, then you sort of see that there's a two-side story to this, and that actually the lack of clarity, the lack of preparedness, the lack of expertise, and this indecisiveness about how to build a new economic system or a new political system or a new whatever system that sort of keeps everything in status quo is a big factor to resistance to change, and it's going to keep hindering the SEC's ability to respond.
I love that answer, because it showcases the dire need for education in our political system.
And it's not just about blockchain, and it's not just about vilifying blockchain. No. It's also about vilifying anything that inherently, challenges the way that things currently work. And that's going to be true of nearly every critical technological innovation in the foreseeable future, because we've reached this era of exponential technology that just enables so much, and it challenges and sets these new precedents, and it's really changing the structure of how a lot of things operate, both in the private sector and in the public sector. And so to me, the impact of that is really something that has so much potential, but is going to meet this resistance from existing regulation that seems to still think that it can survive as a reactive body that responds to technology as it sort of happens, as opposed to trying to anticipate it or trying to build alongside it.
Before we start on our next topic, here's something really exciting. Everyone struggles with these really highly complex, intricate Ethereum names. ENS has a solution that's really game-changing for you. Revolutionizing your digital identity with ENS. Transform long, complex Ethereum name addresses into easy-to-remember names, safely, securely, and uniquely yours. Visit ens.app to get started today, and ENS welcomes you to the new internet. Yeah, and I think that this next article really showcases exactly that. Clearly for especially the SEC, that under Gensler, we're at a 10-year high for enforcement actions. And, these are not, Coinbase, Kraken, leave some of the other ones out of here. They're really trying. Like, they went and said, we want clarity. There's consumer demand. There's other countries around the world that are legislating and providing us clarity. The EU, my car is as clear as day on how to manage and deal with these things in relation to MiFID II. But here we are, and they're just handing out fines, and trying to shut down innovation. And I can say, my fear of this is, had we had this mentality in the 90s when the internet was rising, we probably would not be talking to each other right now with the technology we're using today, because it quite simply, you would have allowed startups to be able to appear. You would never have been able to allow them to mature and grow into what they are today, if everyone was just fear of getting sued.
Yeah. And I think, here you really see the impact of it in the amount of innovation that's happening abroad. You're really starting to see international startups, international to the US, because I'm also international to the US, FYI. But I think you're really starting to see, certain markets. Like, I was talking to someone about the impact that Argentina has had in the development of Ethereum with Open Zeppelin coming out of Argentina. I think Sandbox or Decentraland has some founders that are Argentinian, and it's really had an impact. And you see sort of everything that's going on in Africa. You're looking at all of these different players and entities from different markets really start to shine, because the US is like legitimately holding its own innovators back. And you're starting to see a lot of migration of US startups piloting internationally or moving their operations internationally. And then the other bit of that is, as a regulating entity, the SEC has historically been, at the very top of, where other jurisdictions want to emulate. And then today you can't really say the same thing. And actually the EU has really capitalized on this and fall, wherever you want on the spectrum of, you think the EU should be a thing or shouldn't be a thing. The reality is today, everyone's looking at them as the status quo of like what you aspire to have as regulatory standards. And that's not even just on the finance side. It's also on the, privacy side, on an identity, on the ESG and environmental standards as well. So they're really starting to understand how they, as a, unified regulating body, can really set better precedents. And I think the gap between what's going on with regulation in the EU and what's going on with regulation in the US is just starting to become incredibly wide. And, the fact that one of those markets is punitive, whereas the other one is proactively legislating consistently, I think that that's just going to change the structure of how innovation takes place, where it takes place, and who has first market access to a lot of the things that are happening next. And unfortunately for Americans, it might not be them.
I can tell you for a fact, I clearly am a U.S. citizen, and I've built companies for over 2 decades, longer than that here in the United States. I know the system well. I firmly, like, I am a capitalist as clear as day. FinRamp, which is yWhales, new startup, is an EU-based company, and so it can absolutely work here in the United States, but Ripple has already spent $200 million defending their use case or trying to get clarity. Same with Coinbase, Kraken, everything we're seeing. We can just go to the EU, exactly that. My car is there. It's coming live this year. It's as clear as can be. It allows us to kind of enter the market and go from there. And then, really the path from there is obviously the UK, MENA, Dubai, Asia. They're all very welcoming of this new economy. They understand it's not, it's a technology. It's not an entire, kind of escape from reality. It's just you're replacing SWIFT, and the United States is very defensive of their SWIFT system because we saw them even during the Ukraine-Russia conflict. Like, that was the only power they had, was to cut Russia off using SWIFT, and they feel they'd be losing that power. I think is part of my conspiracy theory.
Yeah, no, I completely agree. I mean, this is a big debate that's sort of been happening since, Bitcoin became a thing. It's this idea that inherently a lot of the way that you control populace, that you control, decision making across governments around the world is money supply, and understanding how to control money is one of those factors. And so I think the big reason why there's so much resistance to change ties back to, our previous conversation, this idea that how do you build an economic system where you're able to preserve some of that power, some of that control, some of that wealth? And then how does everything that's going on in this distributed ecosystem that's around the world, how do you then take that and turn it into something that remains favorable to you? And I think the inability to sort of create something within that is causing even more resistance to change, because it's specifically made to be decentralized, and it's made to enable a little bit more more power for people that are, anywhere in the world, that are in markets that traditionally would be ignored, in, innovation ecosystems that would traditionally be completely undersupported or underfunded, in places where that might be completely conflicting with your political views or your, current status on the world. And so I think this is what we're going to have to face, is this idea. And Americans, I think, are going to have to really stand up and say that this is a problem, because it obviously, the SEC will continue to act as it so chooses. And I don't think we're going to see an end to, punitive reactions from regulators. I think we're going to continue to see that. And for the foreseeable future, you're going to continue to see delays. You're going to continue to see, lack of clarity, up until the point where American retailers can really say, hey, this is a problem. We want first access to innovation, as we've always had. And it's just not the case anymore. And so until citizens stand up for it, you're really not going to see anything change, I think.
Yeah, and I'd even argue to a certain point, consumers have stood up. We've seen a record rise of Americans trying to access cryptocurrencies, but I would say that what's been offered to date is garbage.
That's the big market risk, is that if you're doing it outside of that, then you're increasing the likelihood that you won't have access to top in class, but you'll have access to whatever's available in that market, in that like hidden market, right? Which was the entire purpose of regulation in the first place. And then now it sort of defeating its own purpose, which is crazy to me.
Yeah. Well, and here we are, still it's been, over a year since the collapse of FTX. We've now seen that the FTX, one of the reasons why the Bitcoin ETF kind of dropped so drastically from its launch is they sold $1 billion. The estate sold $1 billion worth of Bitcoin out of the FTX treasury. Now I think there's a lot of things we can go into there. I don't want to spend too much time on FTX, but right now they're automatically saying there's things afoul. There's people trying to sue the current court ordered group that's in there. I mean, these people are charging $1,500 to $2,000 an hour to be in there. And so there's a lot of issues. And now there's going to be an independent organization, because this entire thing, again, going from a startup to the largest exchange in the world, clearly was done with a lot more fraud than we're being showed. I know a lot of insiders there. I'm sure you do as well. The stories aren't lining up. And so I think this is a good thing. And I hope to get clarity, but I hope that they also come out with a common sense regulation that allows us to do this. And to be clear, FTX issue, in my opinion, and you can say whatever the case is, had nothing to do with cryptocurrencies. It was just plain old white collar crime. Same as Bear Stearns, same as anything else.
Yeah, I mean, I love saying, when the news first started to get on the radar, before it was even made public, I had a lot of friends check in on me that were saying things like, are you okay? How exposed are you? So on and so forth. And I was like, what are you even talking about? And they're like, didn't you move everything to FTX? And I'm like, why on earth would I do that? And they kept saying, well, because he's an impact guy. And I was like, what? Like, to any real impact person, their entire agenda relied on solely carbon credits and not even the investments that they promised. And so when I started deep diving into like their bad behavior, all of it was really like they were an exchange that was ultimately acting like both a bank and a VC, which inherently ties up the liquidity you're supposed to have as an exchange. And so I think fundamentally this was really like a business model conflict of interest between what the business model was supposed to be versus the actions and decisions that they were making with their own liquidity. So I think very much correct in that it wasn't about cryptocurrency. It was really about the way that this organization was run, the decisions, the strategic decisions that were made, and the verticals that they sort of took the money and then invested. Like if you are a bank and you're tying up all of your liquidity in startups that may take years to exit, then you have a very big problem with your liquidity, and you've got to figure out how to, put your eggs in multiple baskets to ensure that that doesn't get tied up. And if you're an exchange, which is supposed to have even more liquidity than a bank, then now we're saying, this line of thinking of investing in startups is a little crazier if you're tying up most or if not all of your liquidity into these kinds of investments. So it's really risky behavior all around.
That doesn't even count giving themselves billion-dollar loans out of client funds with no collateral or anything else.
No, of course, and compensation packages and all of this, crazy talk. It was just all around bad behavior. But then this goes back into inherently this discussion on like, what is regulation for, if not to protect investors, to provide standards for transparency. And if you have a body that is resistant to providing clarity around those rules, then inherently you defeat the purpose of your own existence. And, I am a very big libertarian, even when it doesn't sound that way, I am a very big libertarian, but I also think there's room for multiple ecosystems to be taking place at once. And one of those is a heavily regulated ecosystem. And there are moments in my life where I want to participate in a responsible market that has oversight and that has, these trust measures built in. And sadly,
transparency.
We aren't really enabling that for what it can be robustly positive ecosystem that cryptocurrencies can enable and that blockchain can enable. And so it sort of pains me that we're at this place where it's like this really big tug of war between, bad crypto and bad digital assets and bad actors. And, but then the industry itself demanding the ability to build trust and the standards and guidelines by which they have to abide. And I think Coinbase illustrated that perfectly when they had to, sue. So, who's making really good money? Lawyers. It's a great time to be a lawyer. Great time.
Yep. Especially because nobody understands this. So, and your same thing. And again, I look at the last FTX story as good news for the cryptocurrency industry. And I look at this one right here as another good story. So Chainalysis, crime's gone down almost 30% in last year. They're giving a large amount of this to Sam Bankman. So we just said that FTX was not cryptocurrency related, but there was a lot of misuse of funds that just happened to be cryptocurrencies, and so they were kind of counting that as fraudulent use. Okay, that's fine, whatever the case is. So one person was accounting for almost 30% or almost a quarter of the crime out there. But my favorite person to always bring up when we talk about this is Elizabeth Warren, because she just talks about the same stories all over. And I think, I don't know if we have the story in our list right now, but she's pointing out this $900,000 of cryptocurrencies that was used in a money laundering case. And she actually got community noted on Twitter and it stated, they go, that's, okay, but that same exact, crime syndicate had $900 million plus in US fiat currency. So 100x, increase over that was done by the currency of what she's supposed to be overseeing. So it's kind of like, you can money launder with anything. We just saw Hunter Biden just got busted for money laundering with paintings and art. That doesn't mean you're banning art.
Yeah. It's one of those things. I was actually on a plane watching a movie about this, that, the money pathway of laundering through art. And I think it's one of those things where, to me, Elizabeth Warren is really, she criticizes anything that she cannot control or that she does not believe is on her side, right? We had this conversation, I think, in a past podcast where Ukraine could receive all the amount of money that they wanted via cryptocurrency, but not Palestinians, right? And so once it's Palestine receiving, aid money or whatever, then it's like terrorists are receiving money. But if it's Ukraine, it's, silence, radio silence. Like, she wasn't saying it was positive, but she was just like, there was nothing to say about that. And so I think really she illustrates this type of resistance to change that seems to be the ongoing theme of this episode, which is this resistance to change into something that does not fit your perspective of what the world should look like. It does not preserve your power, it does not preserve your wealth, and therefore it is a bad thing. And I think she really embodies that to me over and over again through her interviews. I think, crime being down is incredible. I'd be really curious to see like what some of the factors are that, that they've found contributed to this, aside from sort of bad actors being removed from the ecosystem. I think, there's also this idea to me that as crypto becomes much more mainstream adopted, and you're sort of seeing huge, Fortune 100 and 500 companies playing around with crypto, you're starting to see, offerings of products and services that are regulated in markets other than the US and some in the US. And I think that might also lead to this idea that, there's less opportunity to commit crime when there's more responsible actors in the ecosystem, which again goes back to this idea of enabling that ecosystem to take place in the first place. And I think Europe's done a very good job at that, and a few other markets around the world have also done a very good job at that.
Yeah, no, I completely agree. Let's see. So, here we go. So, BRICS, I have said, for years, I've been talking about BRICS as this is the number one concern, to the US dollar. This is the largest thing that we need to deal with. So Russia and India have announced a partnership to build a modern digital economy infrastructure aimed to become the leaders. I don't think it's the IT sector, but essentially the world economic sector. So, BRICS is Brazil, Russia, India, China, and South Africa. We just saw Argentina said no to go into there. There's a number of other countries. I think there's another like 9 or 10 countries that have signed up, but they're not, going to increase the acronym. To me, this is like, it's a big, big, big deal because the U.S. dollar was always the petrodollar. That was the rate of exchange. You could go anywhere in the world, and they recognize the U.S. dollar. Now losing that much on this part of the world, I think it's going to be really tough. And I think that when you have something like cryptocurrencies done right, and I'm not saying that everyone's done it right. I'm clearly saying a lot of people have done it wrong. But if you do a correct smart contract, you do it well, you're transparent, you have good governance, you have good regulation. There is no way that a fiat, a traditional fiat, can match the speed, clarity, and ability to kind of have transparency and auditing to prevent things like what we just talked about and everything else. So I think this is a bigger deal and we know China's been trying to come out with one, but if they do this right, I think it could be real danger to the United States dollar.
Yeah, I think we've been hearing this story for a little bit, but I think what makes this timing particularly interesting is that there's a specific partnership between Russia and India to do this. And I think that that's been really like one of the missing pieces, right? Is that ideally, for this to actually be able to happen, you would need to sort of allow this to creep up on each of the economies of the stakeholders that are involved, right? And so if Russia and India start enabling certain types of features of cross-border payments, wholesale CBDC, recognizing each other's currency, pegged to something, then all of these like little actions, I think, really lead to the establishment of this kind of ecosystem, where before it was really like this idea of all of them sort of agreeing to do it and then saying, okay, well, we're committed to exploring it or whatever. Having two countries actively recognize each other's economy and economic infrastructure in order to be able to sort of lay the groundwork for this is really where you're going to start to see the first few things that are going to set the precedent for this being a reality. And so I think it's really exciting to me to sort of see that this is, a deal between two countries that are specifically saying we recognize each other's economic infrastructure enough to be able to find commonalities and then build the IT that corresponds to that. The other thing is, yes, Argentina said no, and we can dive into Argentina at any given point in time. But I think one of the really exciting bits about this is also that, these countries are starting to take form not just on the economic standpoint, but also on the political standpoint. So right now, South Africa is at a reputational high, like an all-time reputational high. People absolutely love South Africa. It's super Googled. Let's say their country brand is at this incredible peak. And so I think that one of the factors here is this idea that if these countries sort of start leveraging this reputational high, India's doing really well on the innovation standpoint, like they're investing in so many different types of projects. People are starting to look at them not just as like builders of tech as they used to be, because they obviously have always been like an epicenter of outsourcing, but if they're actually perceived as like leading some of this, and then you bring in South Africa's attempt to sort of be a leader or, a political leader, then I think all of these things combined with this like ability to set these precedents via Russia and India partnership, then I think you've really got the groundwork for something that can truly challenge the US. And obviously the way that the SEC is going, I don't know how it's going to respond to this in a way that's effective and fast enough unless they start to get their ducks in a row ASAP. But again, I'm kind of skeptical about that at the moment.
Yeah, and I spent some time in South Africa last year, and I can tell you, it was the one of the highest attended conferences that I hosted or was around with. And what was most critical is that when you ask the audience or you talk to anyone, how why are you interested in cryptocurrencies, and they go, corruption is so bad.
Yeah.
There is so much fraud. There's so much corruption. There is no transparency that they can see where this is the future, and they believe in the economic engine of their country. But there's no way to get over the hump of they don't like money goes into the government and just doesn't come out.
Yeah.
And so they look at this as a true way to kind of revamp the entire system and eliminate fraud. And so I can tell you from the United States perspective, when people see BRICS, they don't think of clear, transparency, regulated, and honest. But that's really what it is. I mean, and I think the United States could have led with this, and they're continually falling behind. So
yeah, well, the other big thing is also, there are many powers at play here, because you've got a lot of international entities that sort of are responsible for a lot of the rails for the international economics to take place, right? You've got BIS, you've got the World Bank, you've got a lot of different entities that sort of come into play. But the fact that several companies are coming together, several countries are coming together, and the fact that they've got this like economic force and also political force, and now positive brand impressions, then I think that really changes the conversation around how different institutions try to support this. And so if they together as a unit approach a BIS and say, hey, this is what we want to get done, BIS can't just automatically discount it any more than it can discount the US, which has been historically such a powerful force to do it. And so the fact that they're sort of amassing this brand capital, both on the economic front and on the political front as a unit, I think makes it a really serious threat this time around, as opposed to some of the announcements that we've heard prior to this moment.
Today's episode is proudly sponsored by Beyond Enterprises, the ultimate 360-degree partner for companies ready to embrace the power of blockchain in their business strategies. Beyond Enterprises stands out as a beacon of expertise with a blockchain agnostic approach that has seen successful projects on Ethereum, EOS, and Arc. Guided by blockchain thought leaders and fueled by inspired advisors, the team has played a pivotal role in over 40 successful ventures spanning token generation events, security token offerings, exchanges, and more. From healthcare to travel, finance, and beyond, Beyond Enterprises has left a massive mark on diverse industries. Elevate your business strategy today with pioneers of blockchain integrations, Beyond Enterprises, trusted 360 partner. Oh, absolutely. Absolutely. Spent some last week. One of our guests was one of the founders of Digital Pound Foundation. This is really interesting because, you even mentioned it before, UK is not part of the EU anymore. They're kind of having to rebuild their entire infrastructure since being cut off. And I will say, I was all over the world last year, spent a lot of time in London. There was no one that wasn't upset about, Brexit, feeling, like, hey, even those that were for it have recognized, that the pains of which they're dealing with there, because there's no bridge to really connect them to the people that they used to do business with. When you're in London, every one of them had businesses, in Liechtenstein, Switzerland, Germany, all these other countries, and now they've been really cut off from there. So seeing Digital Pound starting to get this together, which will help enable those cross-border payments and speed back up those transaction times. A lot of that's what we're seeing this for. But I know you spend a bunch of time in this as well.
Yes, and I love being in London, but now I need a visa. It's the first time I ever need a visa to go. So I think it's an interesting one, because indeed it sets the proper foundation for needing digital infrastructure. So I think on the bright side, it's one of those things that is a catalyst to adopting digital infrastructure. So I'm excited by that. At the same time, a big piece of this will be its ability to enable certain cross-border functions, right? So the whole value add of a digital infrastructure, in addition to enhancing trust and enhancing transaction speed, is this ability to do more with it that extends past your own country or your own borders and limitations, right? So I think a big thing will be, okay, even if the UK is doing this in a very fast way, is it able to bring alongside it other entities that would then make this a really valuable ecosystem to them? So if one of the biggest consequences of Brexit has been that people are frustrated by what's going on the cross-border front. If this digital infrastructure does not have a solution to that, then ultimately they might also face resistance to adoption, because realistically speaking, ordinary citizens might already, have some trust issues and also some resistance to adopting this digital infrastructure. And it will be made more so if they can't actually do what they are now facing trouble doing through it. And so I think it'll be an interesting thing, and that I hope that as much force as they're putting into this project technologically, that they're stacking up the ecosystem and rollout approaches to this, because ultimately that's going to be the make or break factor for the success of this project.
Yeah, no, absolutely. And I think for people that don't understand, truly cross-border payments and how much of a pain in the what they are, it is right now in the United States, or really anywhere, if you're on Swift rails, you have to start that payment 7 to 10 days in advance, and so you're talking about the loss of funds, the loss of all this stuff, and just like, hey, you have to move it moves so slow. So smart contracts and all this other stuff, you can speed this down to minutes or hours, even if it gets down to a couple days. That's a huge win. So let's see. EU is about to outlaw and restrict some of the most, kind of prolific prizes of DeFi and everything else. But I also, I spend a lot of time with Micah in my car. I know you do as well. And so some of these I think we'll just kind of walk through them, because some of them are like I'm okay with. And a lot of this has to do with we're moving out of like kind of the dark phase of DeFi, which is, anonymous, no regulation, no nothing. It's a free for all. It's the Wild West. And in my opinion, it just doesn't work. Like, it hasn't worked. There's tons of innovation, but there's so much fraud. There's so much theft. There's so much, misunderstanding of all these things, rug pulls, everything else, that it's okay. There's always going to be a DeFi. Like, same as there's always going to be a dark web. But majority of people are going to choose to do business on, on Amazon or an eBay or something that has like clear, transparent governance than they do on, some random DeFi exchange and everything else. So, right now they're just, privacy coins, anything that could be used for money laundering or to remove anonymity is going away. KYC, AML, OFAC compliance, which is the standard around the world, whether you're on Swift or blockchain, is going to be a thing. And then really, kind of getting into, a lot of this has to do with anti-money laundering, as you know. I mean, like, that's the goal, is that you want control, just enough control to make sure it's not being used illicitly, but you don't want to stop the flow of commerce. And so I think that's a really hard challenge for governments.
Yeah. I mean, I also think this is one of those conversations that really requires a lot of nuance, because I think historically speaking, identity and identifiability and control have sort of been conflated in our ecosystem. Like, if your transactions are identifiable, therefore you've got no control. But actually, this kind of regulation sort of is a precedent for us responding in a way that separates those two things, right? Like, just because you operate in the light and having gone through KYC, AML, and so on and so forth, does not inherently mean that whatever entity or enterprise is controlling or enabling your transactions has that control over your funds, right? Like, the principle of sovereign money can coexist with identifiability. It cannot coexist with like the idea that there are mechanisms and features in place that can strip you of your own, ability to handle your money, to withdraw, to so on and so forth. So I think here is where we really need to kind of go through this legislation with a fine-tooth comb and say, where is the separation between control and identifiability? Because those two things are really the key factors in being able to preserve the actual value add of a decentralized, finance ecosystem, versus this ability to say, we are preventing crime from doing so. So to me, really, like, the concern or like thing to keep an eye out for is this like harmony between identifiability and control. And I think if we are able to say, okay, most of what you do sort of can be identifiable because that's what the regulation says, that still enables the individual to not get lost in the ecosystem that we have now, which is a bank can inherently freeze your funds, can do, XYZ, can tell you we won't give you a return unless XYZ. And so this idea that you can still manage your money, you can still protect your money, you are the ultimate, holder of your property and manager of your property, property being money in this case, then ultimately identifiability doesn't necessarily really impact that if done right.
Yep. Yeah. No. And I think that number one, you're right on there. Part of this other one is around something we touched on earlier, which is, why are Bitcoin ETFs so popular? Is because no one wants to hold custody on this. And so
Yeah.
part of my car is really taking a shot at one of the weakest points of cryptocurrencies, which is, self custody. I think it's everyone's right. You should absolutely do it.
Yeah.
It's a horrible idea. It is. Most people are not prepared. I don't care how savvy you are. I know people that are been in the space, 10 plus years that have lost funds or losing funds and can't even understand what happened or why. And so, the ability to have these in a regulated institution. And by the way, under MiFID under MiFID two or my car, it's not a very expensive license to be a custodian. Like, so you're just saying like, hey, I want to be a custodian. You're going to use someone like Fireblocks or BitGo or whoever it is as your back end. And then, it's your funds. We're not going to touch them. And by the way, here's all the things to make sure it's there. But the people holding their own keys and wanting to be their own bank and deal with their own KYC, it's going to be niche. It's always going to exist. I think it's absolutely right. I'm not saying that it shouldn't exist. I just think it's going to be a teeny tiny little fraction of the market compared to what it is
and
today.
that's fine so long as that option exists, which is why I'm going to really hammer this point in, is that identifiability and self-custody should be able to coexist, right? Inherently, even if you reported your wallet, or even if there were some way to make your transactions, not your transactions, but your wallet identifiable, but then you still are able to preserve that self-custody, I think that is also something that's really it still enables regulators to vet this anti-money laundering requirement, but at the same time it enables the self-custody, which was one of the principal value adds of the ecosystem in the first place. And so I agree with you completely that the market will be dominated by custodial solutions. But I think a big element of this is, can we separate identity and control and identifiability and control? And can, in regulation, these two live in harmony, enabling, options for consumers, which at the end of the day should be really the primary mandate of a free market, is really to enable consumers to have options to make their own decisions, informed or uninformed, by the way, but to make their own decisions and to ultimately be able to live within a regulated and safe environment by having this identifiability factor, but still be able to make choices about their own property. And I think that that's the aspiration of any free market. And if we are not able to find that harmony in regulation, then I think that that's where we run into a lot of these frictions between how citizens feel and how governments feel. I have to really go through this regulation with a fine-tooth comb in order to figure out whether that harmony exists. I don't know.
Yeah, I've spent a lot of time with it, and I will say that's why FinRamp is being built in the EU, is because it's so crystal clear. It's MiFID two, which is the gold standard literally, and then just kind of adapted for tokenomics and digital assets. But one of the points that I think that we really need to start having the conversation around is that privacy. GDPR does exist. Like, I don't want anyone in the world to know every single thing I'm buying or selling or who I'm doing business with. And, it's one of the things that cryptocurrencies is just bad. It's all there. I mean, I was in Switzerland this past year a whole bunch of times, and they're very much, hey, Bitcoin, Ethereum, you can pay for it anywhere else. And I'm literally standing there outside of a food vendor, and they're like, here, scan this and you can pay with Ethereum. And I'm as cryptocurrency, pro as you're going to get. I'm like, there is no way. There's not a chance that I would ever use that, because now my wallet will be forever connected to this street vendor, and God knows who they're doing business with. And anyone would be able to say, oh, he did business with, they don't know who that is. So there's really this need for, very similar to how a bank helps, protect your identity, where only certain people need access to it. And you can argue who should need access to it, if anyone, but it's auditable, it's regulated, and you can do, buy and sell stocks all day long. It doesn't say Jay Steinback is buying and selling. It says your broker is buying and selling. And then, it's the records are kept in the back end.
Yeah, I totally agree. Well, also a big thing here is the permanence of data, right? One of the interesting things that are up for debate in my mind about the value add of blockchain is inherently you are creating what is supposed to be a permanent record of all of these transactions, right? And that to me is a question that is up for debate. What is the degree of permanence that we need in society to be able to find this harmony between, the fact that you are a trusted player and the fact that we don't want to know everything about you, and the fact that some of the transactions are actually completely irrelevant and nobody needs to know them. And we have, I think, collectively as a society, just gone on this like big data mentality where like we need all the data and then we need to apply AI onto it and then we need to source all the insights, and all of those will turn into like derivative offerings for your convenience and your safety and your protection and your whatever. And so we've got this like idea that all of this data requires permanence, and I don't think that that should be the case. I think that we really should be having conversations about what data really no longer has a place in the world, how to get rid of it, and how to involve these safety mechanisms whereby like, do I really need to know that you know peer-to-peer paid for Coca-Cola, you know, at your local neighborhood? Because I don't, right? And that data will really not matter to anyone but Coca-Cola once probably, or like beverage industry once maybe. And so I think this notion that where AI can be really, really valuable is to create this like category of insights, but then help us make decisions on a few transactions that really like they could just stop existing and the world would be fine and we could move on without it. And then you as a user of this technology could feel safer in knowing that like not all of your transactions will be on there forever, and that you do have some level of shielding from people knowing everything that you're up to with your money. And I think that that's a really important feature. But unfortunately, I feel most innovators and most regulators and most of the world today is locked on this big data idea, and we really need to challenge that by asking, what is your stance on the permanence of data, and how does your product reflect that?
Yeah, 100%. And by the way, here in our next story is the exact reason why. So it is, and again, I'm not Canadian. I enjoy freedom of speech while it still exists here in the United States. But Canada's use of the law to freeze protesters' cryptocurrency donations was just deemed unconstitutional. So the Federal Court of Canada deemed the emergency law used to freeze funds and crypto donations to protesting truckers as unreasonable and unconstitutional. The law was invoked by the Canadian government, claiming the national emergency during the Freedom Convoy protests during COVID-19 restrictions. So essentially, just as people just said, "Hey, I support the voice that these truckers are trying to do." They may or may not know every single thing that was happening, any traffic violations, I don't know. And I, by the way, I also don't know what the laws around, peaceful protesting or protesting the government are in Canada. But in the same sense, if someone donated, cryptocurrencies to this, goes, yeah, hey, I'll give them $10, whatever the case is. A lot of people had their bank accounts frozen for donating to this. A lot of people had, their not USDC, but did have their accounts at Coinbase and other cryptocurrencies entirely frozen for making that donation. And I think it highlights before why there's need for privacy, because to my knowledge, they were not deemed a terrorist organization. It was not an OFAC issue in any way, shape, or form. These are people that were protesting their government, and I don't know what was legal or not legal. But then to have your entire bank account frozen because you may have given $20 to them. I mean, that's what's really scary, and that's why people are so against CBDCs.
Yeah, I mean, this story is like really interesting to me. I mean, on the one hand, COVID-19 contributed to my dad's death, so I have like very strong feelings about like staying safe across these kinds of diseases. This story still horrifies me. Like I truly cannot believe that we have reached a point where control is so overt in that sense. Like when you were saying that it is bad for someone to have an opinion and to be able to support that opinion challenges like every notion of a free society that we've had in a really long time. I mean, to be honest, like Canada has consistently branded itself as, a free society where freedom of speech is respected and so on and so forth. And then you see these kinds of actions and it's really, an illustration of how people are more resistant to change when it challenges conventional structures of power. And I think it really is frustrating, and then I can see how it would set their innovation agenda back when they're trying to use an instrument like a CBDC, but then sort of have a population saying, well, we don't trust you to, maintain our control. And this is where, again, identifiability and control are huge. I think identifiability and saying, hey, these people, might not be respecting COVID restrictions, however you feel about what the government wants to do about that, whatever. But at the same time, your money should never be frozen, right? Because it is inherently your property. And so, whether the government wanted to send a fine to anyone that had donated, whether they had options that did not include seizing property. And I think the trust factor in saying we're going to seize your property because we can, and these are the institutions that enable that. And by the way, we're building this digitally now, is really not going to help anyone. And there's going to be so much blowback on that. And I think we actually haven't even seen the full blowback of this case yet. I think people are growing increasingly frustrated at governments that are trying to act in this way. And I think I've seen so many pitches for CBDCs over the past few years that are trying to solve all of these huge international and huge national problems using these instruments. And I have yet to meet a person that hasn't thought critically about the features that need to be included in it that is in favor of it. Like if you're in the periphery of the space or outside of the space, no one wants this.
Yeah, and I think there's 2 points I want to touch on. One is I think that's why there's choice needed. So I think that it's great that there's USDC by Circle, USDT by Tether. PayPal had their own for a few minutes. So I think there's it's okay to have banks or institutions branding their own stable coin as that's tied to an actual physical asset. It's good. And the thing that I want to point out here, because it drives me crazy, is they're saying that millions of dollars of cryptocurrency was raised, but the exact amount remains unclear due to tracking challenges. Bullshit. You can call right now Chainalysis or Elliptic, and in an hour, they will tell you the exact amount to the penny, exactly where it went, every single wallet that was included. This is exactly the problem we have with governments, and just their. When you want to talk to people that are educated like us, that this doesn't fly, because we now everything you're saying is a lie. Like when you state something like that, you've lost all credibility, all validity of your entire argument, because there's no way that's true.
But we've seen this happen over and over and over again, whereby, like, even, back to Elizabeth Warren, who's our favorite human, she also sort of says, well, this money is being sent to terrorist organizations and whatever. But then when you start to actually break down what she's saying, she doesn't actually have a lot of factual, support, evidentiary support to say that. And then it has zero bearing on the quantity of dollars that have been doing the same thing for years. And so I think we've sort of seen, and I swear to God, the episode title for this, has to be something in relation to the resistance of change and how that impacts, power dynamics, because ultimately that's what this is. This is saying the Canadian government does not agree with your position, and therefore we will act punitively to prevent you from exercising this, decision. And we've seen that repeatedly across, US and Canada and a couple other governments who are hyper resistant to change. And they're saying, we will find a way to punish you, even if the facts are not all there. And this to me just says, that line that you highlighted just says, we haven't done our diligence. Yeah. We just are in complete disagreement with, your position. And therefore everyone kind of gets swept under the rug of, being punished, regardless of how, tangentially they were involved in this debate.
Yeah, we need to pause your freedoms because you hurt our feelings.
Yeah.
And I think that's just this is why, and that's why Bitcoin exists. So last story of the day, just because we need to mix in a little bit of AI. We've been so heavy on regulation, cryptocurrency, blockchain, smart contracts. Got to bring in a little bit of continuing with the fear of the government, or the government pushing fear on us, I guess I should say. So right now, the Doomsday Clock, which seems like it's always been a fraction away from the end of humanity since the 60s and the Cold War. They're now moving it even further. So the major concerns, nuclear war, again, same thing since the Cold War. Since World War II, climate change, which has been a heavy focus. Were you at Davos, by the way?
Not this year, but yes, last year.
So, major conferences with world leaders about this, biological threats, that's a new one coming, with COVID and a variety of other things. Now AI, now computers, the ones that we loved and we appreciated, now they're going to kill us at some point. So we need to worry about this. my thought on this is a little different on this. I've been following Elon's Optimus project, his robots and everything else he's doing, and he's planning on next year. He just said in the Tesla earnings call yesterday, they're going to start manufacturing Optimus, which is their little robot, in 25, and they believe they're going to make an initial batch of 10 million Gen 1s over the next few years. They will be AI powered. They will be there. And I think that's a very different fear because now we're getting into the Terminator thing of like, hey, my computer is going to do some weird stuff on its own, to like, they actually have access to real world tasks and rules. What's on this list? What's got you the most fearful?
I mean, just given the state of how many conflicts and wars there are currently active across nuclear powers, I think that's always like a scary thing. But I think everyone's, pretty much consensus is that we should not use nuclear weapons. Climate change is always something that I'm, deeply concerned about as someone that spends a lot of time on islands or in places that are prone for, first natural disasters and very destructive natural disasters. I think what I find really funny in this, though, and I just can't believe it's phrased this way, but the fact that AI itself is a threat and not like the actors that use AI in certain ways. It's a really interesting way to use like language in a passive way to blame the tech as opposed to blame the people. And so they're saying like AI is the problem. And then they lower down, say it poses risks in military applications. Okay, but then the threat isn't really AI. The threat is military organizations using AI. And I just think that that's a really interesting and ironic thing in saying AI has the potential to magnify disinformation as you are actively disinforming people by saying AI has the capacity on its own to do all of these bad things, whereas we're not really blaming the creators or the developers or the enablers and builders of this tech and all of its possible applicability. AI has amazing applicability in positive directions. It's done a world of good in the health sector. It's done a world of good in supply chain, in consumer convenience, in all of these different things. But we're not saying that. We're saying the dramatic advance poses a risk because of its military applications. Then in reality, the military is the threat here, not the technology itself. And so to me, it's not that I'm trying to downplay AI or its role in, possible ongoing global risk. But I think it's really one of these things where the narrative matters a lot because we're blaming a technology that really cannot exist without the enablement of humanity. And so it's really looking at, well, who is using AI in these possible directions? Who's doing a lot of the research that enables these military applications? And how is that being safeguarded? And where's the risk management strategy and how that's being safeguarded? And that's really, to me, the critical problem and why I would pose it. I do agree that it's one of the biggest risks, but I don't agree it's because of the tech. I think it's because of the way that we're talking about the tech, the way that we're managing the ethics around the tech, the way that we're managing risks around the tech, and the way that we're enabling, a lack of transparency and increased disinformation on where does the buck stop in relation to the development that's going on in the space.
I completely agree. And I'll add one more. I think that the bigger issue is with AI is the total inability to trust anything, because AI is so good. Generative is so fast. I mean, there will be a time in the next few years that the image that you're watching on the screen and the voice that you're hearing, like it can 100% be replicated with near perfect accuracy of my tone, my stutters, everything else that I'm doing, that nobody would know if it's me or not me because it's able to generate that so fast. Just as a quick example, one of my other businesses is we have a title company for real estate. And we had an issue with, we say like, we do not send out like the emails of where to wire funds. We say it, every time we have people sign off on it. And still a couple times a year, people will get that random email and they wire funds off to the wrong place. Like, so how do you manage wire fraud? So email is a clear thing. And most of the time we mitigate it by saying, don't trust email, and right now the answer is you have to call us, call us. We only will verify and verbalize it over the phone. Well, let's be clear. That's going to go away too. You now have you will not be able to trust, even if you talk to that title person every single day on the phone, their voice, their mannerisms, everything else, like AI will be able to replicate that voice, replicate everything that you're doing and be able to manipulate it on the fly in real time with near perfect accuracy. So to me, like, how do we form an ability to trust? And I think it relates back to, the need for like, what's a human and what's not a human, coming up in the future here.
Well, I think there's two things that relate to this. The first is one positive thing, like a silver lining here, is that, over the past few years, we sort of had eroded a lot of critical judgment. Like we were sort of falling for, media and the way that it was presenting stories. We allowed social media to like spread lots of disinformation and so on and so forth. But now we've reached this point where, because there's a lack of trust, because we sort of are now having to face this challenge of like, is this an accurate recording? Is this really this person? So on and so forth. Then it actually, to me, is an opportunity to boost critical judgment and sort of ensure that people are asking questions around authenticity that enable us to sort of take a step back from this like rapid spread of misinformation that had been taking place across earlier social media, and now wonder, okay, well, is this actually true before it has that chance? And so maybe there's a silver lining there. The other thing that I think is important is in relation to this trust factor is that companies that are now, like Apple, for example, are becoming increasingly important because they have so many different data points that actually authenticity is something that they might have in their pipeline to be able to build products around, because all of these different data points that sort of say, okay, well, we have their, facial scan, we've got the fingerprint, we've got certain types of behaviors, we've got geolocation, we've got all of these different data points. And, say what you want about the lack of privacy inherently that means, right? Yep. But ultimately, these kinds of companies that you leave a huge footprint with, like Apple, become sort of a possible, custodian of trust almost and veracity, because they've got sufficient data points to prove or unprove, something that might be online, that, might have been stolen, that might have been, a fraudulent depiction of you. And so it's becoming really interesting to sort of see the directions in which some of these companies go in relation to privacy, security, because they do have that capacity to be enablers of trust for other organizations just by virtue of how much data they have on you itself. It's crazy to me.
Yeah, and you brought up, Apple and the iPhone, and I'm sure there's the same thing on the Android phones as well, which is the facial recognition and some biometrics and everything else. And in the latest version of iOS that just came out a few days ago, you now have the ability to force geolocation with facial ID into pick and choose the apps that you want. So if you have your banking apps, you can actually now I have to enable this, but if you're away from your home, and someone steals your phone and it's a wrench attack, a knife attack, whatever the case is, and they say unlock your phone, that you're gonna unlock it. They're going to run away with your phone, and they have an unlocked phone of which they could do a lot of damage with. But that feature, meaning that, hey, you got away, you got your life saved, but your phone is gone and unlocked. That's a scary thing, especially for people that deal with cryptocurrencies or banking. They now have the ability to say, like, no, you have, like, they're not going to execute a trade, they're not going to execute a transfer without that biometrics there. And I think that's a really good feature to start moving through.
Yeah, I absolutely agree with that. And so I think, but that's inherently what, like this idea that you are facing mistrust, you're facing all of these risks, but at the same time, there are going to be certain players that can actually seize this as an opportunity to build features, to build security measures, to build something that differentiates their product. And I think first to market in features like this is going to be, incredibly powerful. So, hey, Apple, if you're listening, let's talk or whatever. But one of those things that is really important. Now, on the flip side of this, of course, is the bad actors. And this brings us back to this idea that AI itself is not the threat, but really understanding like who is leveraging, AI, what is going on in the space. The bad actors or just actors in general, like they could be good or bad, but understanding that is really, and not framing the conversation around AI being the threat, I think is really critical to us being able to navigate the threat of AI responsibly and accurately, as opposed to saying AI itself is a threat and then trying to hinder AI innovation, because it has really good applications in so many different directions. And so the key question for me is, are we able to sort of escape this narrative, figure out how to get it right, because we're framing the conversation in the correct way? And I think the same thing is, it has many parallels with blockchain, which is this idea that blockchain itself, cryptocurrencies themselves, are not a risk. It's really an understanding of how are these projects built, who is building these projects, and then what is it that we have in place as diligence and trust measures, security measures, to ensure that the projects don't go astray. And those, at the end of the day, really showcase the fact that technology itself is never a threat. It's a neutral set of tools. And really what we need to be paying attention to is how those tools are used, deployed, et cetera. And I think at the end of the day, regulators can really pull from that discussion, because that's what they really need to be looking for. And so these punitive measures in saying, oh, well, we're just going to punish anyone protesting XYZ, or we're going to punish anyone that is innovating in this sector or other sector, I think that is actually counterintuitive to the ways to really protect people. And so in tying all of the stories that we've talked about together today, it really, really is about understanding, what is going on in the space, educating yourself on who the major players are, what are the technical standards being deployed across the space. Innovation should not be hindered. Innovation should be supportive, but it should absolutely come with this cautious and really, dedicated understanding of who is building in the space and how is it being built. And I think that's really the lesson for today's episode, to me at least, in tying all of these stories together.
Lucia, that was one of the most amazing, kind of just rants. I can imagine, and I will say that any politician, anyone that wants to understand kind of the frustrations that people that live in this space feel every day, just go back and listen to what Lucia just said again. It is so wrapped up in you have to be educated, and you have to be hyper educated on a consistent basis, because whatever Elizabeth is upset about is from a story that she read years ago. Mm-hmm. It is not the state of where we're at today, and it's not where we're going, and we're hindering everyone moving forward in a positive manner. So that being said, we've kind of hit the end of our time. Lucia, if people want to hear more of your thoughts, your kind of concepts, or just kind of want to keep in touch, where's the best place to find you?
Definitely a LinkedIn person. I'm really digging it. It's a good place to express thoughts in long form and also have more nuanced conversations. So I'm really digging it these days. LinkedIn is the place to find me, really.
Awesome. Fabulous. yWhales, thank you as always so much for the time. Lucia, pleasure, and we'll see you guys next time.
Thanks so much.